Hey guys, today's topic, using a high cash value whole life policy, an infinite banking policy to both support and potentially acquire a small business. Great topic. Got Barry Brooksby here. Hey Barry.
Hey,
We want to jump into this. I'm going to talk about the silver tsunami that's happening. This is a hot topic right now. You've got millions of baby boomers that are transitioning out of their businesses. When you come across one that looks like you want to acquire it, what are you going to do? So this is a way that you can build working capital and provide an entire strategy to acquire and also to support that small business. Barry, what do you have to say about that? I know you've advised some clients about this.
yeah, first off, people listening might be saying, why are we talking about whole life insurance and buying a business? Like, where's the connect? Because some of you are like disconnected. Whole life insurance is an asset that has a cash value component that allows you to take policy loans against to go acquire a business. So if you want to get an SBA loan and they're requiring 10% down, take a policy loan from your cash value policy. The benefit of whole life insurance and coordinating it with business is you are still earning interest and dividends on your total cash value in the whole life policy. So it's a way for you to continue to make money in the policy and simultaneously make money in the business that you either own or are going to acquire at the same time.
So 4 points. You already mentioned the first one, Barry, which is really using cash value from policy to meet a down payment type requirement for, say, an SBA loan. Great idea. You always have to come up with some cash for a loan like that. The other components of today's video are going to be really looking at tax advantages doing this using these insurance proceeds, how this fits into a comprehensive plan, just how it can relate to your overall estate plan. And I think, Barry, we're lucky because you're going to give us a little case study on how this can work in the latter part of this video. And then finally, how you can kind of set this into a momentum builder, funding additional policies and additional wealth building machines down the road. So before we move on to the next point, Barry, is there anything else you want to say about using cash, say, to fund a down payment on a SBA loan or some other financing or funding options?
You can take a policy loan for whatever you would like. We're talking about taking policy loans for your business. But if you want to buy real estate or crypto or invest in stocks or whatever you prefer, that's up to you. But from the business side, if you want to buy a building and use that policy loan to buy the building, you might be a doctor, you might want to buy equipment. You might have a construction company where you want to buy heavy equipment, machinery, trucks, tractors, etc. You can take policy loans for whatever you want. The benefit is you have access to cash. Unlike a 401k or IRA where you're locking that money up until you're 59 and a half, these policies allow you to access up to about 95% of your total cash value for whatever you want.
And that's working capital 101. And instead of just relying on a bank account where you're not getting the money momentum, where you're not keeping your money working for you, you're utilizing this asset where the money's in a productive place and you're able to take out working capital and keep that money moving whenever you need it. As a business owner, that's pretty powerful.
Yeah.
What about tax advantages? So if you're using insurance proceeds, or I think that's misleading actually, using cash value from a, a, a properly designed policy, how's that different from a tax advantage standpoint versus having to either use cash or liquidate other kinds of assets? You mentioned the inflexibility of other assets.
Yeah. So let's make a comparison. If you have a 401k or IRA and you liquidate that, you would not only have to pay the tax, but prior to 59 and a half, you would also have to pay a 10% early withdrawal penalty. What we're saying is in a properly structured dividend paying whole life insurance policy, the cash comes to you tax free. Why? Because it's a loan. So all your gains, all your growth, you can take out in the form of a loan. And this is you leveraging an asset. We teach this often. This is what the wealthy do. They leverage assets. So if you have equity in real estate, you might even have equity in your business where you could go refinance a portion of your business loan, pull money out, you've got equity, it's all tax free. The policies operate the same way, and we love tax advantage vehicles. Everything from a 401k, IRA, TSP, those types of qualified plans are tax deferred. We don't know what taxes will be 10, 20, 30 years from now. You never have to worry about that as a business owner in a high cash value whole life policy. As long as you follow the criteria, all that cash comes to you in the form of a loan, 100% tax free. Don't have to report it to your accountant or CPA. It's not on your 1040 tax form. It's pretty remarkable because we all want tax free, but as we look at our portfolios, how much of your money right now is actually tax free?
So you mentioned two huge points. One is using assets to fund other assets. What a great idea to have a compounding asset to then provide working capital to grow and operate your business. Powerful idea. I know you've also talked about the different buckets, right? The different tax,
Yeah.
taxable bucket versus tax-free bucket, tax deferred versus tax-free. And I think you just touched on that. The one that I think a lot of business owners probably want is the tax-free bucket. I think you're getting it.
And Steve, along those lines, if you're a business owner, generally speaking, your number one investment is your business. It's hopefully a cash cow, right? Providing a lot of income to you yearly, but also throughout your life. If you pull your focus away from your business and your business starts declining because you're looking at the bright, shiny investment opportunities or some deal that might have gone awry, we say, look, focus on your business. It's your number one investment. But then along the way, you've got this cash value policy that functions as your own bank, and the money grows guaranteed. There is no market volatility in a high cash value whole life policy. You are guaranteed to make money every year. So you can sleep well at night. Your business can function. Your energy, your focus can be on your business, growing that investment larger and larger, while at the same time, you're funding this cash value policy and it's working for you, guaranteed. It's on autopilot. And hey, you can take policy loans 100% tax free to reinvest back into your business. Pretty remarkable.
Pretty remarkable foundation for operating a business. Takes the uncertainty, some of that uncertainty regarding working capital. Have you seen that? Have you had clients share that with you?
Yeah, let me give you like an example. I do have doctor clients, chiropractor clients, dentist clients. Most of those professionals, they are leasing equipment. Just what they do. They lease equipment. Well, on the back end, they're paying a lot of extra money for the equipment in interest, lease fees, etc. What I recommend is why don't you take a policy loan and go buy the equipment with cash, and then you pay the loan back with the same amount of money that you would have paid towards the lease. But here's the thing. As we do the analysis on some of these leases, you might be paying and not even know it, 9%, 12%, 18%, 24%. Well, you can take a policy loan for 5 or 6%, but why not pay yourself back at 12, 18, 24% with the policy cash? And now you're capitalizing on that interest rather than a leasing company. This alone would help enhance your overall business. It's kind of plugging those leaks and not spending money that you don't necessarily have to spend.
And on top of it, you got the flexibility when and how you want to pay back that loan in the first place. So you can pay up
That's
on it.
huge.
Yep.
It's huge.
You might have a boom month. You might have a month where it was a little bit, lesser in sales. So it's nice to have that flexibility for sure.
Business owners, Steve, love flexibility because you may not know what your cash flows will be month over month or year over year. Knowing that you can pay these loans back however you want is wonderful. You're not locking into this specific lease payment or loan payment with a third party. You get to choose how you want to pay it back. And it can all be changed, right? It really is your own bank. You're using that money tax free. It's still growing for you, guaranteed. You get to pay it back however you want. And look, as a business owner, there's no credit check,
Mm.
there's no application. The insurance company isn't asking you, what are you using the money for? And you can show it as an asset
Mm.
under the business name if you want to.
On the balance sheet. Yeah,
Yeah.
that's
Yeah.
kind of huge. Yeah, if you need whatever you're doing, expanding, purchasing a building, whatever it is. So I this is whenever you talk business ownership in the context of estate planning, with my background as an estate planning attorney, it gets pretty interesting to talk about business succession, about liquidity, about what happens to the business if you can't operate it. Those kinds of questions come up, which leads to our next point. How does this relate to an overall estate planning goal that a business owner might have or would have?
Yeah, if you're a sole proprietor and maybe your business is under the formation of an LLC or an S corporation, if you pass away, you've got a death benefit, you can choose. Does it go to the business? Does it go to your family? Do you split it? But that death benefit will always be larger, at least in the policies that we offer, will always be larger than what you've paid in premium. And most of the time, it's passing to your beneficiaries tax free. So the succession planning tool of whole life insurance is powerful because it's a guaranteed payout. It's not term insurance. Term insurance eventually is going to lapse or expire and you'll outlive it most of the time. This is permanent whole life insurance, which means you've got this guaranteed payout, which will help. And Steve, you know this as an estate planning attorney with succession planning. Now, on the flip side, let's say you're a business owner and you've got partners. Well, in that case, you should all have policies on one another. So if there was a premature passing, you've got death benefit that can come in and take over at least income of what that other partner was producing, et cetera. And you can, buyouts for family members or whatever that looks like. It's
Mm.
a permanent death benefit that is an asset not only to you and your family, but an asset to the business for that succession type of planning.
Yeah, and what I love about it too, Barry, is that you have this the cost is going down over time. Eventually, that policy's paid up. So you're dealing with the opposite situation from term, where you have gradually increasing insurance costs through the whole business lifespan and your own lifespan. So I love this because as the business clout and the cash flow and everything grows, the cost of this gets smaller and the power of this policy increases. It's just such a good overall scenario for a business owner to be in.
Yeah, we've got some numbers we're going to look at, and we'll show that
That's
specifically.
that's the next one, the case study here. So yeah, I'm looking forward to the example.
Yeah. So we're going to stay on that line of succession planning, and then we'll get into some cash value numbers. I've run this illustration, and we'll put this up in the video on a 35-year-old business owner putting 50,000 a year into a policy. Now check this out. The first year death benefit is $1.3 million. So if something happened to this business owner in year one, they funded 50 grand, the business, the family, there's 1.3 million of payout that would then be shared or divided however they would want.
Hmm.
That death benefit continues to grow. So we're funding the policy for 25 years through the age of 60.
Okay.
Guess what the death benefit is at the age of 60? 5.1 million. And only 1.2 million has gone into the policy. The cash value in the 25th year at the age of 60, 2.5 million. Now, starting at age 61, there's no more money going into the policy. So, Steve, to your point, the policy gets better and better over time. So at the age of 61, cash value is now 2.65 million. The following year at age 62, cash value is 2.8 million and no premium went into the policy.
Hmm. Yeah.
So we're
Momentum.
seeing cash value growth. The business owner could continue to use that, could even turn it into a stream of tax-free retirement income later. And then there's also the permanent death benefit side. So we'll put the numbers, in the video for people to check out. We always encourage you look at your own numbers. The case studies vary, but in this particular case study, when that 50,000 goes in, immediately there's 84% of that that is in cash value. So most of your premium's going to cash. And
Mm.
we can design these to be a 90-10 or a 60-40. If you're not sure what those splits mean, we've done another video or two on that as well. But most of the premium is going to cash because we want to see the business owner being able to use the money, not lock up the money. And I think around the fourth or fifth year, this policy, 4.5 years, this policy breaks even, meaning the amount of premium put in is now available in cash value. And from there on, it's gravy. It just gets better and better and better.
What I'm thinking about too is the fact that, Barry, I know if you were to add the cash value and the base premium, that would be much lower than the death benefit. And you've given this example quite often, at least I'm pretty sure it would in this example, because people think that you're losing your cash value if you die. And I just want to point out the fact that we're talking about an increasing death benefit.
That's right.
So the cash value is funding the death benefit.
Yeah. Yeah. And your family does get more. The policies we design with the top mutual insurance companies in the industry, we want a growing death benefit that's driven by the cash value growth. So we want to clarify, does the family get the cash value and the death benefit? No. Family or business owner partners would get the death benefit, but it's a growing death benefit. 9 out of 10 times, it is larger than the amount of insurance you purchased originally plus the cash value. So we're seeing that the death benefits are much larger because of that drive of the cash value in growing that death benefit. Again, look at your own numbers. We can put those together for you, but it will make a lot more sense when you're looking at your age, your health, the amount of premium you want to fund. This is $50,000 a year, which, by the way, the minimum premium on this policy is only about $8,000 a year. So if there was a time where this business owner only wanted to put in $8,000, they could, or any amount in between the 8 and the 50. It's a flexible premium, which again, like the loan payment is flexible, the premium payment is flexible as well.
All that flexibility. So to the last point, if someone really gets this going, they get this momentum, how would they potentially use this as a business owner? They can obviously acquire more policies. Like you said, taking out a policy on your partner, your business partner, is a terrific idea and could be a critical one depending on the business. What other ideas have you circulated with clients that are thinking about how to maximize this within their business over time?
Yeah, you never take a policy loan just to take a policy loan. It has to make sense. Our number one reason for taking a policy loan is to buy assets or invest back into the business where you're going to get a 2x, 10x, 20x return on that particular investment. If you want to get into real estate, wonderful. What we continue to do, this is a long-term relationship that we have with our clients, consulting with real estate and other types of investments. But from the business side, just think about this as an asset rather than just putting money in a bank account that, again, is taxable interest. Putting money in the policy allows you to have cash that's guaranteed, liquid, and tax-free. Everyone wants that. All business owners want that, but most don't have it. Think about this as an asset that you can leverage, not just now, but throughout your entire life. The power of guaranteed high cash value whole life insurance is remarkable. We've only scratched the surface today. As a business owner, it allows you more freedom and flexibility. What if you decide you want to buy another business? I have a dentist client right now that owns several, but they own multiple franchises, right? They want to pick up another office. You got cash to do that.
So everybody thinks about real estate, right? I'm going to own a business and hopefully my business might own real estate. This is another asset that people often miss. So it's a 1-2 punch because you got real estate and you can obviously utilize real estate for your business. This provides advantages that you can't even get with real estate due to the liquidity and flexibility that you have around it. This has been a really good look into business ownership, using this the power of this asset and this kind of a policy. Think about it. If you're watching with regard to the silver tsunami, there's gonna be a lot of businesses available. Hopefully you'll be positioned when the right one comes along to go after it and seek the things that matter most to you. Barry, as always, awesome feedback, awesome advice for people watching. There's going to be a link. If you want to look at your own numbers, there'll be a link below wherever you're watching. And of course, like and subscribe if you like this topic. If you have a war story or some kind of a scenario that you went through in business, maybe a policy's helped you, feel free to leave it in the comments. We like to respond to comments. And with that, thanks so much, guys. See you in the next one.